Real estate millionaires, mistakes they wish they never made. Hello everyone and welcome back to another episode at Novarise Invest, your channel for financial education. So today's episode, it's all about sharing the knowledge that I have captured throughout the years by just simply talking to multiple real estate investors. Some of them serve as mentors to me. Some of them share amazing tips that even up to today, I still live by those tips. And I decided to create an episode to just simply share those with you. And hopefully it could help your life for the better. So without further ado, let's just get started. Before we start, let me remind you to subscribe to the channel and hit the notifications button. So one of the things that I was told that they decided they would have paid more attention to is their personal credit. They wish that at the time they would have paid more attention to that because they realized that the interest rates that they were getting were quite high in comparison to what their credit score could have gotten them. So they realized many years later down the road that if they would have worked on building a stronger credit, that they could have qualified for loans that offer better terms and also better rates. So that was one. Another mistake they wish they never made was to not pay attention to their business credit. Business credit is extremely important, especially if you're trying to make it big in real estate, because what happens is that if you continue to apply for loans on a personal level, you will eventually get capped by how much you can qualify for under your personal credit. So one of the biggest benefits of having a business credit is that whatever debt that you amount into it is kept separate from you. And that means that your FICO will not be impacted regardless of the amount of debt that you will acquire, because your business in itself will build its own identity. It will build its own credit. Another mistake they wish they never made is to not wait for the refinancing of their properties. So, and by refinancing means either a cash out, or they were talking about just simply refinancing into better terms, better rates, because this is actually a great tool for you to expand in real estate, because over the years, once you start investing in real estate, that piece of real estate will start accumulating value. And that value is just simply sitting there. That appreciation is just sitting there in a property doing nothing. And a lot of people don't know that they could have taken advantage of a cash out refi to be able to pull that equity out of the house, and so that they can use that new available funding to continue to expand their real estate portfolio. So that's one of the things that they wish they would have known, that they would have studied a little bit more, or at least understand it a little bit more, because they did leave money on the table because they were not aware of it. Same thing for refinancing for better terms. This was more of like a lazy thing on their end, and I'm making it sound pretty. They just didn't refinance it because they were too busy focusing on other things that were non-value add. Meanwhile, they were leaving money on the table because if they would have refinanced for better terms, they would have gotten better cash flow. And that means more money in their pocket, more money to either invest in additional real estate or just to simply reinvesting it back into their real estate portfolio to bring up the value of the properties even more, right? Another mistake they wish they never made is building relationships, right? They did not value the importance of building relationship at a early stage in their career, because let's face it, real estate, it's a relationship business. You build a relationship with your lender. That's how you manage to get access to better products, because at the end of the day, it's also their neck and the line, right? Because the lender is the one who's going to approve you a loan. And if they can't trust you, you can't really blame them for not approving you a loan, because otherwise they'll look bad in front of their bosses. So they wish they would have taken the opportunity to, focus on strengthening that relationship a little bit more, not just simply with the lenders, but with the rest of their power team. Because real estate, it's a relationship business. You do depend on other people who can make your life a lot easier. Call it on the maintenance side of things, call it on the accounting side of things, call it on the legal side of things. Relationships are key for you to get not only the best service, but the best product. And that will eventually translate into the product that you're delivering either to your buyers or to your tenants, depending on the type of real estate investing you want to go into. Or why not just buying a bunch of land and flipping it, right? Another mistake they wish they never made, and this is a big one, it's wanting to do everything themselves. I cannot emphasize this one enough. I guess we all go through it at the beginning in our investing career. We just either don't trust people to do it for us, or we just simply think that if we do it ourselves, we're going to save a lot more money. But the truth of the matter is that, your time is very limited. All of our time is very limited, and it should be used wisely. So one of the things that they really, really regretted doing is by wanting to do everything themselves. And by that, I'm talking the property management of the real estate piece that they have, the accounting. They were doing a mess. Because let's face it, property management have certain skills. They have people skills. They know how to manage the tenants. They know how to engage the tenants. They know how to identify what's wrong. They know about the legal repercussions in certain states if you don't respect them. I mean, that takes a whole wide of knowledge for you to acquire. And imagine doing that and financing and then doing the accounting. They also regret doing the books. In fact, accounting is one of those mistakes that have let me marked big time, because I used to be like that as well, thinking that if I take a look at my books and I manage my books and I register my expenses, that only I will know what the right allocation is and everything will be accurate. But it turns out that that wasn't true. In fact, I actually made a mess, and eventually and thankfully I met my current accountants who managed to help me clean up those books in a way that they look really presentable and enjoyable to look at. So very important. The next mistake they wish they never made is, using the wrong accountant, because not every accountant knows about real estate. And so in order for you to make sure that you're getting the maximum deduction in your real estate portfolio, you have to work with an accountant that understands real estate. And not just that, but also an accountant that can help you work on a tax planning so that you can know what you're working towards in order to obtain the maximum deductions, how to, keep the records of certain receipts, how to record meeting minutes for your company, do everything, the right way, and not just because you decided to wing it, because the IRS doesn't like that. They want to know that whatever you're doing with your taxes, that there was some strategy that actually went into it, and that a lot of thought and planning actually went into it. And last but not least, the biggest mistake, and one that can summarize pretty much everything that you see here on the screen, is the following. But before we do that, if you're enjoying this episode, do not forget to hit the like button right here so you can help this episode rank and help others like you looking for information of this kind. The lack of education. They wish they would have started in their education journey a lot sooner. And by education, I'm not talking about just simply going to school, going to university, just educating yourself about what you don't know and continuously educating yourself about what you don't know, because things do evolve over time. If they would have taken education seriously, they would have understand sooner the importance of business credit, the available financing products that are available so that they can continue to expand in real estate or just improve their cash flow. Same thing with their relationship, and they would have avoided doing everything themselves, because if they educated themselves, that means they would have known how to pick the right team member, how to interview them, and that would have freed them time up to do more important things like buying more real estate, or just simply to continue to educate and look into different ways to expand their real estate portfolio. And why not just any investment portfolio in general? So there you have it. Those are the mistakes they wish that you never made. Now, since I have you here, what are some of the mistakes that you have heard other real estate investors made, or that you have made in your real estate investments? Let me know down in the comment section below. I would love to read from you. And while I still have you here, make sure you check this episode on the side. That's going to help you complement everything you just learned today. And I'll see you soon. Take care. Bye-bye.